Crypto markets show resilience after a weekend drop triggered by US strikes on Iran and the start of a kinetic war that has been bubbling for months. Oil prices are up near 20% and stocks are getting hammered. Has crypto already had its liquidation and there's no one left to sell? Or is this still another head fake? Find out in this week's Crypto Options Unplugged. Welcome back to Crypto Options Unplugged, everyone. I'm Imran Larker from Options Insight. I've got my man Dave from FRNT. Today's special guest is Jason Urban, co-head of digital assets at Galaxy Digital. Welcome, Jason.
Thanks for having me. This is great.
No, this is good stuff. I mean, I love talking to market makers in the space and stuff, but there's no bigger market maker than you guys, right? So we're going to have a lot to talk about.
There's always a lot to talk about. We'll try to keep it interesting and fun.
Yeah, so you have a similar background. TradFi used to be in equity derivatives at Goldman's. You want to tell us a little bit about that and then how you ventured into this crazy world of crypto?
Yeah, so the path is we all start off in TradFi. I started my career at Goldman, ended up running the index volatility flow business. So think like VIX versus variance versus listed in that triangular trade. In 09 or in 08, really, left to go, start that same business over at DRW with Don, which we would know in our space as Cumberland. Mm-hmm. And it's a funny story is that Goldman was, as part of AIG, was a TARP bank. And so at the end of the year when they paid you in 08 was a good year because you're a convexity trader and probably one of the most convex markets ever. Mm-hmm. They said, well, listen, here, you had a good year, but because of TARP, we may actually have to claw that back, at some point.
I remember it well.
Yes.
I had the exact same conversation after 08.
And so I said to my boss, who now runs a very, very large hedge fund, I said, let me get this right. So next year, if I make a bunch of money, you're going to, have to give it to the government. And I'm out of luck. And if I lose a bunch of money, you're going to tell me I'm a one-hit wonder and drag me out back behind the woodshed and shoot me because I know how one-hit wonders get, we're in the trading business. And so just about that time, Don, who was primarily a commodities, and DRW was commodities and fixed income shop, they were really expanding their stretch. And so a team of guys with my team effectively, we left to go start the same index vol business at DRW, and they had never done any equities or anything. So you were greenfielding that. But at that point, I kind of got that entrepreneurial bug and started a bunch of businesses, some of them inside of DRW, some of them outside of DRW. The ones inside were crazy. We had 50,000 head of cattle and a pig farm in Colorado, and those they're long stories that we can get into on that. Some interesting, you learn about the cattle crush, you learn about commodity hedges and all kinds of
commodities are kicking off these days.
Oh well, now especially it's really interesting. The phone hasn't stopped ringing with people with ideas now, like we could do this.
Yeah.
But one of the businesses I started was a crypto lending business, and Galaxy invested in my business, Drawbridge Lending, and BlockFi at the same time. So I still have Zach in my phone as Zach Frenemy because we would go to events and we were both portcos of Galaxy at the time.
Right.
And then March of 2020, what I was really doing with the crypto lending business was I was collaring up Bitcoin and then I was lending against the put strike. And so it was just, the collar loan thing is now, we see that a lot. But at the time I was like, I don't know, like the volatility on these assets is immense. And as a lender, it's really hard to give somebody a good rate. And because I was collaring them, the client picked the put strike, and then you picked the corresponding call that effectively brought the interest rate down to zero and paid for the put. And because Bitcoin, and it's interesting because you look at altcoins now, at the time, at 10,000, at 6,000, Bitcoin wasn't an asset as much as it was an option. Like the people who were believers, we believed that Bitcoin was going to go to where it was, where it came back to, and where it's going to go in the future.
Like 10x was expected. It wasn't like an anomaly or whatever.
Yes, exactly.
Yeah.
But so in that sense, that looks a lot like an option.
Yeah, agreed.
Right? And
Agreed.
so if you look at a lot of the altcoins today, they look like options, right? I mean, some of them are going to end up being worth zero. Some of them are going to figure out their model and the right model, and we can kind of talk about that as we go today. But they'll take off, and it'll be interesting. So back then, I was doing these collar loans, and in March of 2020, our business did exceedingly well because we had puts embedded, and COVID happened, and Bitcoin went from 8,000 to 3,000 on that infamous day, and all our clients made a fortune, as did we, and it was good. And that was when Galaxy and Mike was like, listen, this will do much better inside of Galaxy than it would as a standalone. Let's do a transaction. And so that was how it's funny, I said to Mike, I was like, I'm working for 1 billion. I went from working for 1 billionaire with Don to, start my own gig. I don't know that I want to, go work for another billionaire just yet in my life. And he made a compelling story and said, we can, we got this trading business that's fledgling. Let's get it going.
So he basically said, don't worry, I'll make you a billionaire, so you won't have to think about it.
There's a lot of work between here and a billion, but yes,
Did you know Mike from the TradFi days?
I did not. I met him through the crypto universe. And you're knocking around in those early days. You think back to, 2017, 2018. I mean, it was still a small circle. I still laugh with some of the crew of that vintage. And I'm like, you go to the same conference, and you remember in those early days, crypto was everywhere. And so it wasn't everywhere. It was everywhere in the sense of every city had their little crypto club, their little conference or whatever. And so the handful of us that were in it, we would go from city to city, and it was a little bit like that cartoon, morning Sam, morning Max, like you see the same guys, like, what's new? I'm still working the same thing I was 7 days ago when I saw you in Seattle, and here we are in San Antonio, and guess I'll see you next week in Nashville. It was this routine where you kept seeing the same people. Now bonds were formed. You also kind of figured out who had good ideas and who, needed to work on some of their ideas. Mm-hmm. And so, there was this camaraderie, and you kind of grew up in the business together. There was still a very collegial, and I think crypto broadly is still pretty collegial. I mean, you have a little bit of infighting and things that happen, but for the most part, I think people want to see that the ecosystem win.
Yeah.
And so people will be willing to help.
I mean, my sense is that, it's the feeling that you would have had in banking in the 90s, right? Or early 2000s, where we were in a growth area, right? It was like people were getting paid. People were trying to innovate. They were trying to collaborate, work together, and build things, right? And banking hasn't been like that since '08, right?
Yeah.
Whereas crypto is still like that and continues to be like that. But I wanted to ask you, like, we get a lot of people on this show, and all we hear is about how the ecosystem's growing, and the applications and the institutional adoption and all these things, and it all sounds really bullish longer term. But I think people who've been in the industry like you that long, you're kind of desensitized to the price performance, right?
Yes, very, very, very much so.
Yeah, but what do you make of this decoupling between prices in crypto versus the growth in the space and the adoption and everything that seems to be moving in the right direction?
Yeah, there's a couple different phenomenons, right? If you think back to the boom of COVID, a lot of people were trapped at home. They were, looking for ways to, exercise their brain, and they were, one, learning, and two, they were, gambling to an extent, right? And so you saw market forces really at play. I mean, I think the thing to keep in mind is, even though a lot of crypto has been de-risked in the sense that we have Bitcoin ETFs, and you're seeing every major bank have, efforts. I mean, you mentioned last week you had, significant financial institution here and so on. Like, it's coming our way, right? However, you still have other things that will distract, I guess, is a way to think about it. You have prediction markets, you have other things that some of that animal spirits is there. And so when you think about our market, it's still driven by fundamentals, right? I mean, if they're, the old saying is, why is the market down today? Well, more sellers than buyers. That's not true. There's always an equal number of sellers and buyers, but there are more aggressive sellers than buyers, right? And so when you see that, there are more market forces at play. And so part of the be careful what you wish for with TradFi and large financial managers coming in is when they move, they can move in size, right? And so they're not necessarily buying it because they believe it's going higher. They're buying it as a trade. They believe it's going higher, but it's not going higher forever. And so you have market forces, and if there are bigger sellers, markets are going to go down, right? And if there are bigger buyers, markets are going to go up.
But we've certainly seen bigger sellers of late, right? With a lot of whales potentially selling and Michael Saylor's still buying, but it doesn't seem like he's buying as much as he was. But do you see any signs that the bigger sellers are kind of done?
It certainly feels that way. I mean, whether, it's funny on the sell side of the house, when you think about how you look at, everyone knows everyone, and we all talk and we all have this interconnectedness, and nobody really knows who those big sellers are. Right. And so it's either a couple of whales that have been tucked away, but you would see coin movements, or it could be, nation state or somebody else. Like it's hard to say, but this is one that's kind of the fundamentals, the things that you believe that Bitcoin should be. Forget altcoins and other things, but like just what you believe Bitcoin should be should tell you that Bitcoin should be higher. And so some form of market forces has, a large seller has been what has been kind of holding it back. Now, it's interesting, traveling the world and talking to a number of clients in different jurisdictions, you're starting to see people that have, anecdotally said, 60, low 60s is where people are stepping in again. You also have the miner contingent and what's the marginal cost of production and how are they going to, react in their businesses. So it certainly feels like, did you put the bottom in or we're definitely near the bottom? I mean, as you think about TradFi, right? Whenever you hit a top or you hit a bottom, there's a lot of back and forth until that base is set, and then you can either rally or sell off depending on top or bottom. It certainly feels the price action has been like that we're putting in a level here, and now really it's going to be what's the narrative? What are the market forces? Do we see a strategic Bitcoin reserve? Do we see people looking at it as an alternative? Do you really want to buy gold at, north of 5K? I mean, silver, at $100 an ounce, like things that also don't make people like to pick on us crypto guys, but I like you see something that went as parabolic as that. Is that a healthy market? Does that make sense?
Yeah.
And so there's certainly
Do you see some truth to this idea that miners might decide to throw in the towel and use their power to, for AI data centers rather than Bitcoin mining?
Well, it's interesting. So Galaxy, part of the digital assets versus data center, we have a huge data center business, and that really was birthed out of Bitcoin mining. The things that I've learned with that, and it's the other side of the house, but we're all talking, we're all wearing the same uniform, is it's very different. Right? There are elements of it that are the same. You have power, you have a giant building, you have computers, right? But it's actually a lot more, there's a lot more nuance to it, right? And
so like you just flick a switch and you go from
it's not that easy, right? And so, in some cases it makes sense because the returns are there, and some hyperscaler comes in and says, what's your price? All right, multiply that by 3 and I'll pay it. Right? You'll say, okay, I'll figure that out. But some of it isn't, right? And it depends where in the world you are. It depends on what your power sources are. It's not as simple as that. And so I don't think the miners are going to go away. I think you'll see some movements in hash and things of that nature. But that's also healthy in any market, any ecosystem, right? To see a little bit of that back and forth.
Yeah. I mean, saying about potentially us forming a bottom here. I I mean, I was probably like anyone else, had kind of one eye open over the weekend. I actually thought we might see a bit of a flush sub 60. And again, I'm always very much on the you kind of buy Bitcoin on the geopolitics. But we've held up pretty well, right, given what's going on in Iran at the moment.
Yeah, it's interesting. It's, is it because the sellers' eyes have moved to other more pressing issues, right? I mean, that's one way to think about it. And you're looking at your portfolio, you're looking at your life, you're looking at your family, and maybe just whack-a-moling Bitcoin lower isn't something that's there.
And you've probably already sold. The marginal seller is already there in Bitcoin, right?
Yeah,
the market's probably not as long as maybe it was.
Agreed. And so, maybe people look at it and say, well, let's take a break here, because what would I rather own, in the universe? I mean, that's the other thing you have to think about is, like, every time you sell something, you're by nature buying something, whether you want to be long dollars or you want to be long, like, you're long that. Do you really want to be long that in this environment? I think that there's a calculus that people are playing in terms of how they're thinking about things. And what do I really want to be long? And so, maybe a little bit of that use case of Bitcoin that we all know and love is kind of coming back into the front of people's minds.
Yeah, it's interesting because I think a lot of people don't get this, particularly like in times of stress like we're in with say, with what's going on in the Middle East. I'm generally a kind of more on the side of, rates and liquidity dominate everything, and that liquidity has to find a home. So you just tend to get this kind of reallocation. I always remember during COVID, me and a few others were in an offsite place, and it was all kind of hunkered down. And I was sat next to the head of credit, the head of equities, like trading. I was on the FX side, and the world felt like it was ending. But then all of a sudden, you got like the real sort of big asset managers starting to buy like credit, because they're looking at like a 20-year trade, and they're seeing these yields that they hadn't seen in a while, and you start to go, okay, now we're going to probably bounce. People, how can you say that? But money has to get put to work, right? And so I think these are moments where everyone thinks that everything's going to zero all of a sudden, but actually no, money needs to go somewhere, right? And then people start to think, okay, well, what is the trade? What's going to benefit? And I wonder now whether we get more of a, because everyone gave up on the fundamental story for Bitcoin over the last few weeks. All of a sudden, it's not a hedge, it's not an inflation hedge, it's not a debasement hedge, and it just seemed to be trading tick for tick with software stocks. Now I wonder whether in these times of like extreme stress, I would say we cover like the far left and far right, how the risk distribution when we're talking about Bitcoin. Are we now at like the far left? Does Bitcoin start to rediscover its narrative again? What are your thoughts on that?
No, I think precisely that said. I think people will start to look at it and say, okay, we don't have a government, a central government that's going to come in and manipulate this, right? And I think that's really the ethos for a lot of us that initially got into it was, not a pure distrust of government, but maybe an understanding of humanity, right? I think maybe that's a better way.
way to put it.
Yeah. Like an understanding of humanity, what people are going to do, and people generally take the easy path. What's the easy path in a more polarized political world? Just print more money.
Yeah, debase currency.
Exactly. Yeah. And so like that use case, and the other thing is this, like. And the same thing goes, and we can talk about tokenization a little bit of equities or securities, is there are places in the world that they don't worry about their currency. In the United States, I live in Chicago. I'm not, I'm watching the dollar because that's what I do. Like, it's my living, but 99.999% of the people there don't worry about, I got paid in dollars. But if you're in other parts of the world, you're worried, like, okay, is inflation going to really bite me? What can I get into, right? Well, right now with global strife and, the role that America is playing, in that, right? People might say, like, listen, I don't really want to own dollars, and I certainly don't want to own my currency, and I certainly don't, like, where do I go? And that brings you back to that original, thought process or ethos with this, and saying, hey, listen, I think that we should, I should own some crypto, I should own some Bitcoin, right?
And I agree with that argument, and that's kind of one of the reasons I got into Bitcoin in 2020, right? I agreed with the whole currency debasement story. It was pretty much the only way they could go after COVID, and which is why I had a basket of gold, silver, Bitcoin, etc. But has the latest move in precious metals and the dislocation of crypto from that not concerned you in terms of that thesis and the kind of use case for crypto?
It certainly did, and that was why you start to kind of look for boogeymen around the corner, like who's selling, right? Is you can get as crazy as you want and say, oh, it's
whoever it may be.
Yeah, I mean, listen. I mean, pick your country, right? I mean, you can make an argument that it was the U.S. because they want to do a strategic Bitcoin reserve. You can make your argument that it was some of these other players on the global stage.
Yeah, we've talked about China wanting to keep a lid on it before, haven't we?
Yeah.
So there's always, but remember, like for governments broadly, like you're in a position where what do you control? You control your currency, your ability to tax, your army, which allows you to tax, which allows you to care for your people or not, depending on if you're a despot or not. But the reality is, like, this is something where it's the democratization of finance, but it's really about giving people freedom in some ways. Like you control your own financial security, and so. Maybe there's going to be more of that comes in. Now, this is where you start to bifurcate crypto between what I'll call like Bitcoin, the store of value, and then blockchain as the technology, and what do these alts do, and how do you think about the alt space, in that kind of a universe, and what are these coins doing? What services do they provide? Some of them are very innovative, and some of them, like I think that it's hard to maintain. Like we're talking about a decade, at some point here, right? Where like it's hard to keep that energy going. And so where do you see who's building, who's driving, who's got the communities behind them? Where's the innovation happening?
Solana was an interesting one. Last week, our guest on the show pointed out that obviously they have been a big sort of meme coin kind of focus, right? That in terms of when that was all happening, but that's died down a bit. But now the new use case that they're pitching for Solana and what's going to drive that growth is micropayments. Is that something you've seen much of? Or?
No, 100%. I mean, payments are always been and have always been one of the most important elements, I think, of crypto. And it's funny you mentioned Solana. I hope she doesn't get mad. I was talking to Lily. This is probably maybe a year and a half ago now. And the comment that she made to me on the meme coin space, she's like, listen, keep in mind and remember that for the previous administration, there wasn't a clear pathway to what you could do from a financialization, aspect. There weren't clear rails, and that terrified people, right? I don't think that crypto, I mean, people sometimes think of us as this libertarian, lawless, land of, Lord of the Flies or whatever, financial Lord of the Flies, I don't think that that's the case. Like it's really people want, most of the people just wanted rules, a set of guardrails that we could look to and say, okay, you're allowed to do this, 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 and this. You can't do these other things, or you can't do these other things in this way. Find a new way. I mean, I've always taken the stance that I actually love regulation, because anytime somebody builds a wall, that means there's an opportunity for me as a sell-side business to find a solution to help my client, my firm, et cetera, to cross the wall, whether it's go over, go around, go under. We'll find a way. And obviously we're going to do it legally, because none of, we're a publicly traded company and none of us want to have a problem, but you should see our legal bills, but we figure it out, and there's an opportunity. Yeah. And so, like, I think when you think about, like take Solana, for instance, I mean, payments are there. Technology matters. That's the technology use case, right? Like there's the macro use case of, say, Bitcoin, of like, okay, where do I put my money? But then there's like, what does the financial universe look like in 5 years, in 10 years? Do we have AI bots that are now going to be transferring payments back and forth, and we're not even going to know?
For sure.
Because like that's where this is going. And then the technological aspect really matters. What's your throughput? How much block space do you have? I mean, there's issues like that. And you think about block space, and back to your AI question, in terms of hyperscalers, like it's a really nuanced thing. It's an unbelievably awesome time to be in our industry, because you're seeing this convergence of TradFi, of AI, of things like prediction markets that we've never done before, and in a world where it's not a single superpower or a duality state with U.S. and China. Like people are people everywhere. It doesn't. I think people like information has taught us that we have more in common with each other than we don't. And so these things are going to matter more to that. Do I really care what my government is saying about it? No, I care about the person that I'm doing a transaction with somewhere halfway around the world, because it's an honest, good transaction. And what's the medium of exchange in that world?
Yeah, it's an actually beneficial thing, right?
Has it surprised you a bit? I mean, obviously talking about AI, like, because in my mind, like crypto is like the kind of natural complement to AI. And yet we had this kind of AI boom. Has it surprised you that it's not sort of, traded with that so much?
Well, it is. It has on the way down.
On the way down, yeah.
Asymmetric correlation.
But you hear, like anything, nothing ever moves in lockstep. Sometimes, we as traders, we become very, like I learned the hard way early in my career that, you get so focused on something, and I'll tell a story back to 2009. And in 2009, before that March when we hit the lows, like this is, January, February, I had done very well in 2008 being long a bunch of downside. And I'm buying puts and I'm buying puts, and Skew just continues to just underperform on any down movement. And not that you would,
that was early 2009, right?
Yeah.
Yeah, I remember that I had the same thing.
Yeah. And so I'm sitting there and I'm getting my face smashed in, and I'm like, I can't understand it. I'm right on my direction. I'm right on everything. And the same playbook that I ran for the last 18 months is not working anymore. Like, as a trader, you have to reinvent yourself every 2 years. But I'm like, I thought I had a little bit more time on this. And, finally took the position off because you got to puke out of, I can't lose forever. And I stepped back and I took a couple of days and I said to myself, let me think about this. And then it kind of dawned on me and I said, if you're long the S&P at 690, do you really care if it goes to 500?
You don't need to hedge it anymore.
At that point, it's no longer a thing. And that was actually the impetus for me starting the crypto lending business with the collars, because I was like, Bitcoin being in a lot of ways an option here, like, of course the calls are going to trade way over the puts. And so of course I can take a product where I have a massive call skew, and visually, if I said to you 10,000 Bitcoin, the 8,000 put and the 12,000 call, the income that I'm generating from the 12,000 call more than covers the 8,000 put and the interest rate to lend the dollars at, you'd be like, well, that's crazy. But visually, it's like it's equidistant. You go to a miner and you say, you have the same bet. Could be down 20%, it could be up 20%. What do you like? But I'm going to loan you a bunch of money for free. And they'd be like, really? Like, yeah, because the call skew was so massive. And it wasn't, yes, it was because it was an option, but it was also because at that point, if you're making a bet on 10,000 Bitcoin for a lot of people, it's like, all right, if it goes to zero, like for institutional money, I mean, that's the same thing. It's not, not a big deal.
So this leads nicely onto talking about the skew, because obviously you're an equity derivatives guy, you're massive in the option space, right? Now, there's been a massive shift in skew, right, over the last year in crypto. Bitcoin skew used to trade for calls, like you said, across all of the curve, and now the entire curve trades firmly in put premium, right? Is that just a function of all this institutional money that's come in that's doing collars like the trade that you're describing, and it's going to permanently stay like that, like equities now, do you think? Or are we ever going to see call skew come back?
I think it's going to permanently, like, this is one of those things where be careful what you wish for with TradFi coming in and money managers coming in. Like, even though, I'll say some of us old mustache Pete's who have been around for a long time look at this and we're like, yeah, we think it's going to 1 million. Like, it's still the same construct. Most people look at this and they're saying, yeah, this is now an asset, and they look at it through an equity lens as well. So one of the things that's difficult, is you can never really take Bitcoin or crypto broadly and say, oh, it looks exactly like a currency. It looks exactly like a commodity. It looks exactly like an equity. And it's funny, as we sit here and we look at all of our backgrounds as well as all of our backgrounds in the industry, people tend to gravitate. Like, I'll talk to FX traders, like, oh, it trades like FX, and this is what we did. And and then you talk to equity guys, they're like, yeah, well, this is, it looks like an equity. And this, so everybody's trying to fit it. It really is its own thing.
It's a shapeshifter, isn't it? Yeah.
But to that end, I do think that broadly, if you had to take a snapshot of the next 5 years, you would see puts trading over calls. I think.
Well, it seems like the longer dated skew for sure is like what people will use to put those sort of collars on. But that front end skew is still a bit fickle, I would say. It's kind of speculative money will come and chase that, and you'll see a brief moment of call skew because we're up 20% in the last week, right? But that will kind of follow spot around, but maybe that 3 month and onward skew will structurally be for puts, right?
100%. The other thing to look at is basis, right? Because basis is a very similar construct. So somebody out there who wants to, do a deep dive using AI on a correlation and say, okay, basis movements or second order basis movements relative to skew, is there a correlation? Does one lead the other? I mean, intuitively it would tell you, yes, when the market is hot, dollars are in demand, basis blows out, skew should follow suit, right? And so it's easy for me to sit here and say, oh, it's going to be puts over calls forever, but we've been on a one-way train to today, 67, right? Like it's there are market forces that will drive
and
that.
And then the other sort of derivatives angle that I wanted to ask you about was gamma positioning, right? So that's all anyone talks about in TradFi these days, right? I'm an options educator, and a lot of what I do is trying to identify where the big strikes are, what the gamma positioning is, and that does seem to have quite a lot of impact in the S&P for sure. Is that something that you think impacts crypto as much, particularly Bitcoin, because that's where the big notionals are of gamma, or is that still to come and the zero DTE options aren't big enough yet? And what do you think?
I think it depends on who has the position on, right? So it's one thing to say I have big open interest on a handful of strikes, right? But if the big open interest is, and I'll say a dumb overwriter who doesn't care and doesn't understand, they're looking at it for yield, right? They're not somebody that's looking at the Greeks in the next order. You start to approach that strike, you got to think about who's got the other side of that trade on and what are their behaviors going to be. Where, in a more mature market like S&P, where everybody's more or less a vol trader, right? The overwhelming number of people are vol traders. They're gonna trade their gamma accordingly, and you can make assumptions. I think if you have a big strike that's one professional versus another professional, and it isn't just pure overwrite, like you could start to see where those forces are more relevant and more akin to what you see in TradFi. So it's really understanding, I think, because it's still, while it's a lot better than it was, 8 years ago, it's still not.
And does that change on the kind of whole IBIT growth as well? Because IBIT options are trading more than Deribit now, right? Apparently. So is that, again, the way the participants use the IBIT options, is that more akin to what we see in equities? And do you think that creates a bit of gravity or not really?
A little bit, but what's interesting is you'll see IBIT options trade significantly away still from Deribit. Like there's still an opportunity.
Like a vol differential?
Yeah.
Okay.
Like and almost in some cases a full vol.
Okay.
Like you'll see something trading 90 bips over, same strike, same tenor, same expiry.
But is that about the collateral? Is that about the native collateral versus?
I think it's a couple of things. Some of it is collateral. Some of it is just who's doing the buying. Right. Is it easy for some punter in middle of nowhere US to do this versus some crypto native who's got Bitcoin and can actually knows what it's worth? Like there are a lot of different elements at play that kind of affect that.
Interesting.
So, but you still, listen, you would think that spreads like that don't exist, and they don't exist. They don't exist for a long time, and they don't persist. But they're there. They're there more often than you would think. 90 bips on the same strike, same expiry inside of 30 days, 40, inside of 45 days. That's interesting.
Yeah. I guess that's your bread and butter as a market maker, being able to trade on all the different venues to be able to capture that, right?
Yeah, and it's not easy for everybody to do. It takes, I jokingly, mentioned the legal bills, but we have entities, regulated entities all over the world. And so that takes a lot of time, a lot of effort, a lot of money. Why I got to, sport coat it up and leave my hoodie at home when you're talking to a regulator is because, like.
Yeah, I don't talk to any of that.
Trust me, I'd be more comfortable in that than this. But, but the reality is like, that's an expensive sport. And so you either have to be willing to commit to it because there are other use cases for your business to do that, because you're not going to do it for the one time, every couple of weeks when you get one strike that trades off on, 100 Bitcoin or whatever. Like, okay, it's a nice little little berry, but it's not like, do you really want to spend $11 million to get regulated and pick your jurisdiction? Like,
exactly.
Not really.
No, exactly. The some of the outlooks and some of like the long-term targets that we were hearing last week on the show were pretty staggering. Like we're talking about, 20x type numbers in things like Solana and Ethereum. I mean, first of all, I'd like to know if you have sympathy for those views, like, or do you think it's because to me there seems like a bit of a disconnect between some of the people who are bullish in the space have got some pretty mad targets, right, for the next few years of where we could still go on the upside. But if you look at how volatility has just been declining in the space to quite low levels, like front ends at like 30 sometimes.
Yeah, it's trading under oil. I mean, it's definitely trading under oil.
So is it
now, but.
What gives, right? Is it that vol's just been getting too cheap because there's quite a lot of natural supply of it, and yet the scenarios do still exist of having a 1 or 2 year scream 20x type move, or do you think the compression of vol will make that less likely to occur?
So some of the compression of vol, it depends who's selling it, right? Like if you have long-term holders that are, you think about the ETH whale a couple of years ago, right?
Yeah, I remember, yeah.
Yeah, he never wanted to get taken out, right? So he was selling, and he would sell massive amounts, and the street got dealt, and everybody was, choking on it until the market started rallying, and then he was coming after it, he was buying it back as fast as he could, and everybody's kind of sitting in the corner like, I'm not giving mine up yet, like they're so it depends who's selling it, and what their view is, but there are people that definitely don't want to be short, and so yes, there is a possibility for dislocated moves when you start to move through strikes. In terms of something of that magnitude, a 20xer, you're talking about a 20 bagger in a name that's several billions of dollars, right? Like there has to be a meaningful rationale for that, right? Mm-hmm. There has to be use cases, adoption. There has to be some kind of an economic model that justifies that, right? Mm-hmm. So, one of the trends that we're seeing broadly is people moving from, I don't want to call them meme coins because it's not in that sense, but moving from projects or coins that are doing things or not doing things that are more just community based to projects or communities that actually have an economic model attached to that, right? Mm. And so, in order
Can you give us an example of?
Well, here, like hype is a great example, right? Like, I think people have really
that's Hyper, the exchange, the decentralized exchange.
Yes.
Okay.
Right, like people look at that and they're saying, okay, there's an economic model to this. Right, like they're burning tokens, they're doing things that are there, and then there are other projects that aren't, right? Like they may have interesting things that are happening, but when you start to think about, okay, well, what does the gas have to be? What is your security budget / inflation? What does that look like? What does that tell you about what's happening? And as you get more educated eyeballs on this, right? Like I think you're going to start to see people say, I don't really know why I should own coin, the 150th coin. Nobody's building on it. Nobody's doing anything. There is nothing on the horizon. I don't care that the founder is charismatic. Like, what is it actually going to do that's going to
Speaking of Hyperliquid, I heard that people were trading on that the weekend around all the war kicking off and stuff, right?
Yeah.
And so there was a clear use case there where TradFi markets weren't open and you were able to transact on there when it was all kicking off.
Yeah, and you're going to see more of that, as you see more real world assets come on chain, right? I think as you start to see, tokenized equities, I mean, people were using that as a proxy for where the market was going to open. Like you can look at those things and say, all right, now, some of it is a speed to market issue, in terms of, some of these financial institutions can't move fast enough in TradFi, right? And then they'll be the ones that adapt, right, and embrace that evolution are going to be the ones that will thrive, and the ones that don't, for whatever reason. And I think you see a little bit of that now with all this, TradFi institutions coming in. It's different this time than it was in, say, 21. And the reason is because people have now recognized with the ETFs and others, this is here to stay. And so now there's almost a panic on the other side, like I have to have a strategy. And it's really hard to say I have to have a strategy when you don't truly believe too, right? Like when you're, for whatever reason,
it's forced in, aren't you?
Yeah, you're like, your boss comes to you and says, hey, what's your crypto strategy? Or your board of directors comes to you as a bank and says, what's your digital asset strategy? You don't want to say I don't have one. So
isn't it just to buy companies then? Shouldn't there be a lot of consolidation and takeovers in the space?
Well, I think you will see more of that. I think that there's, I was talking to a founder the other day, and he's like, it's really a world of haves and have-nots. People who raised last year are feeling healthy and feeling encouraged. People that didn't raise, whether it was TGE or whatever, people who didn't raise are feeling a little short. Their runways are shortening, and this crypto backdrop has not helped that. So you really see this dichotomy of people. Like some people are pretty excited about what the world is going to be, and there's other people that are like, pretty distraught and
doesn't that offer the opportunity for like a JP Morgan to like kind of bottom fish where they can basically they can scoop in a load of these companies to build out their infrastructure faster in crypto when we're at the low of the market kind of thing?
Yes and no. And so what I mean by that is that the yes is yes, you will see those people shopping. Right. The no is, you've got to remember these institutions, like when you buy a company, right? And it's a little more nuanced. Like you buy all their previous sins, and you don't necessarily know what their sins were. Yeah. If you're JP Morgan and you've got this massive market cap, massive franchise, are you going to step forward and say, I'm going to risk it all by buying this tokenization platform that may have run afoul of a regulator in some jurisdiction that I don't know about, and now I'm going to be back on the front page of the Wall Street Journal? So there's what I think you'll end up see happening is you'll see crypto consolidation or financial gravity inside of crypto first, and then as you get more rails and more, I'll say an absolution where it's like, okay, anything that happened previous to 2024 doesn't count, right? Like you're all forgiven, and something of that nature. I'm not saying that that's going to happen, but you'll see the consolidation in the ecosystem, right? And then you'll see those get rolled into these financial institutions. Or if you take a really positive view, you'll see those institutions start to take over some of the other ones, some of the the old stalwarts that haven't adapted and haven't evolved.
Interesting. Yeah.
So, but we don't know, you don't know what's going to happen. I mean, you look at somebody like a Coinbase or a Galaxy, large organizations that have the ability to go out and roll things up. You will see some roll-ups. I mean, the other aspect that's interesting when we speak of roll-ups is the DAT space, right? Like so many of these digital asset treasuries came out trying to copy Michael Saylor, and
that worked out well.
It's certainly been a challenging market, but that doesn't mean that there's not an opportunity set there for that. I do think that I was so anti-DAT when they first came out. I was like, why would I ever buy something for more than what it's intrinsically worth?
What's the true sort of value add?
And I could make the argument in the proof of stake protocols, and I could say, okay, an ETF buys a bunch of SOL, but they're not staking it. And even if they could stake it, even if they could stake it, because of liquidity, they're never going to stake 100% of it, right? So if you think it through, you're like, okay, I'll never stake 100% because I could have a bunch of redemptions.
Yeah.
And so I have and you look at what happened, with Ethereum post the hack. you know what I'm talking about. I don't want to use client names.
Yeah,
but,
exactly.
But you saw the unbonding period at 40 days, and then the rebonding period at 90. Because everybody was pulling out of certain protocols and going to safe havens. But if you're an ETF and you have 130 days where your asset isn't being staked, or it's stuck because you can't take it out either, right? Like it's stuck in the queue. You can't take that risk. And now if you're a DAT and you can take 100% of your treasury and you can put it to work immediately, either staking it or more, right? A DAT should trade better than an ETF in that world. And that was one of the switches. And then the ability to go and actually build operating businesses. We would jokingly say at Galaxy that we were the original DAT. Like, Mike had a bunch of Bitcoin, a bunch of crypto, and then we built a company around it, right? Like that was how it kind of went. I mean, they were Mike's an excellent investor. We were investing, excellent trader. Like we did the right things along the way that built a company around what was initially a treasury. Yeah. So when I look at the DAT space broadly, I say, okay, well, because of regulation, you couldn't have a public market L1. Right, they all became foundations to be able to use the regulatory roadmap that they had available to them. If you had launched a L1 today, you'd probably launch it as a stock, right? Like that would be the natural path. And so there really is a natural partnership between foundations and one or two DATs. I don't think you need 30 DATs or 50 DATs per coin. I think that loses the, but that's also an opportunity for roll up, and it's a little more hairy than that because of corporate structures and some of this race to market. People made mistakes and did things that preclude them from being good takeover targets for a period of time, but that will change.
Speaking of the DATs, like something I always used to joke about is that I didn't understand why Michael Saylor wasn't just buying a load of risk reversals or collars, as you call them in the US, against his massive treasury, right? And it was like treasury companies were always willing to sell calls to enhance yield, but none of them willing to buy puts with that yield. Is that the case? Is it a case of like you see a lot of the flow, you're in the market, you probably speak to all these DATs, like what percentage of them ever looked at hedging the downside?
Well, for initially none. Initially that was, you see buy puts, like, no, we got cash, we're gonna sell puts, right? It was like, that was literally I know it's actually a good entry strategy, but like that's what people were saying.
It's not risk management though, is it?
But the other thing that you gotta keep in mind with a lot of these DATs is you're inheriting a corporate structure. So if you go and buy a biomedical company that's got a biomedical CEO and a biomedical COO and a legal and so on, you're not buying somebody that, you don't have to hedge the replacement hip that you've got on your books. It isn't like, I'm selling, synthetic elbows, I better hedge titanium. Like people aren't thinking about it that way, right? And so you have a management team that's different, and there's always this balance. And people were thinking that, everything is going to continue up and to the right and not think through that. So, the smart ones have taken a risk management approach, but there's a number of them that, that's where we can be helpful. It's where we come in and say, hey guys, how about this strategy? Or how do you want to think about that?
But I would go back to like my FX days and, like speaking to corporate treasuries around like hedge structures and strategies. I mean, for years, like it was, the word derivatives was like, oh, we won't touch derivatives. And we're like, but this is a hedging instrument. This isn't the weapons of financial destruction or whatever they were being saying. But no, we just, but they're not markets guys, right? They, they're running some huge FX risk through their businesses, but they're not markets guys. And there was a long education process with a lot of these people.
And there were probably a lot of bodies along the way, right? Like, people, and I think you'll see the same thing in DATs. People that don't employ or deploy risk management strategies are going to end up, at some point you get bit. And that's part of also to your previous question about the skew and the curve shape. Like, in the early days, everybody was long and strong, and over time, financial evolution happens too. Yeah. And so the people that aren't thinking about, I should buy some puts. I've had a 40% rally in the asset that I'm trading, maybe I should hedge a little bit, take a little bit of that profit and put it to work. And so but that's that financial evolution. I think you'll see the same thing in the DAT space.
Of course, yeah. And I think that's why, obviously, with Galaxy are doing what we're doing at FR&T. That's why we're all building these businesses, right, to position for that and that evolution.
Exactly.
Jason, I think perhaps before we go, difficult at the moment, given what's going on in the Middle East, and to maybe formulate a view. But what are your views, kind of short term? How are you thinking about the market here, right, today, and then how are you thinking it more sort of medium term over the course of the year?
Yeah, here. It's a dangerous prediction market. Like, you try to run things tight, I think, from a risk perspective. Does China get involved? Does Russia get involved? Like, there are things that happen. Is the straits closed for more than 25 days or whatever the optimal, period of time is? And so it's hard to say, like, this is definitely, helmets on, chin straps up, and be ready for anything that comes your way. I think that in a lot of ways, we're either the bottom has been put in, or we're near the bottom here at this price point.
For Bitcoin.
I think that you should see the back half of the year be much more constructive. I think that in the alt space, you'll see some things that'll do well on the heels of Bitcoin, and you'll see some things that will continue to languish. And then the question is, do the people who have been, crypto's been very tribal or religious in a lot of ways, over time, do those people give up the ghost, so to speak, and say, you know what, I'm done. I'm not betting on whatever coin that is anymore, right? And so you see this rotation back into strength or perceived strength. But I do think that the back half will be very constructive. Bitcoin price, I think that the fundamentals, the selling that we've seen, whether we can identify it or not, for the past 4 or 5 months, you're going to see that wane, and then your natural bids and the fundamentals that we believe are true, because governments they're going to continue to debase their currency. Like that is the one thing we can, death taxes, and the fact that our elected officials are going to spend more money than they take in. So.
Okay, amazing. Thank you so much for coming on the show. It's been an enlightening conversation. We covered a lot of ground, but it was really good. Thanks.
Well, thank you for having me, and hopefully next time I see you guys, we're not in the middle of a global war and financial.
Touch wood.
But it might actually be in Dubai, right? So.
Exactly.
Yeah, exactly. Good to have this conversation in the sun in April.
Yes, absolutely.
All right.
All right.
Thanks, Jason.
Cheers. That's it for this week's show, guys. Thanks for watching. I'll catch you back here next week.